Good morning to all the fine followers of Bookmap. Welcome one, welcome all. My name is Charles. I'm from a community called Piratetraders, where we are focused on the ES, the NQ, and how it moves through the two-way auction process. So we are going to start off this morning looking at what the market did on Friday. We'll talk about Thursday and Friday of last week. So what I believe is going on here is what we call a balance area. And we're going to zoom out a little bit and I will explain why and how. But essentially just to explain why, looking at just the last few days, the market had been balancing. It broke higher, creating momentum, which immediately reversed right back down and then immediately reversed right back up. So on Friday morning, as the market was beginning to work its way higher, I went ahead and marked this at 56.45 as a balance area low. That's an important level to carry forward today. That is 56.45 as a balance area low. As the market worked its way higher throughout the day, I was trying to guess what could be a potential balance area high. And I marked this area here at 56.94 as a potential balance area high. Well, if you look at what happened later on in the day, the market worked its way above 94, spent a little bit of time, tried to get continuation, reversed exactly at the previous all-time high, and then came crashing right back down. Okay? That is behavior indicative of a balance area. Okay? So the fact that we are opening this morning below this level, 56.94, that tells me right off the gate two things. One, the highest probability is that the market is going to go lower to head down to 56.45. And two, if I'm wrong, I'll find out right away. Okay? If it is not in balance, if the market is ready to continue higher this morning, the first thing it will do is it will get above 56.94 and hold it as support. So we'll give it a few extra ticks. We'll call it 95, which is the overnight high. If the market can get above there this morning, it can find support. It has to bring in new buyers up there and get continuation higher, then I'll be bullish to test the all-time high and look for a move higher from there. If it cannot, if it either looks above and fails that level or it doesn't even get there, in my mind, the highest probability today is that we're heading back down towards 56.45. Now, does that mean for sure we're going to get to 56.45? No, there's no guarantee, but that is the direction that the market is going, okay? That is because I believe the market is in balance. All right, so let's take a second and we'll zoom out. We'll take a look at the monthly, the weekly, and the daily. We're going to look at the monthly and weekly just to give us context. As intraday traders, a lot of times we got to zoom out and get some perspective to understand what's really going on. When we look at the chart for the ES on the monthly, that is the S&P 500, we can see we have momentum. So all that means is this market can keep going up. There's no reason it has to go down. Now we're talking about on a monthly basis right now. Okay. So we're saying this month, it doesn't have to go down, but that doesn't matter about today, intraday. Now we'll zoom in a little bit and take a look at the weekly. So on the weekly, same story. We could see the market had balance. It created momentum. It had balance, and we are still in momentum. So as long as we stay above last week's lows, we are likely to continue the momentum to the upside this week. So again, that's not today. That's just this week. On the weekly, we still have momentum, and we can keep that momentum going. That will change if we get below last week's weekly low, which is at 56.12. Okay, so as long as we stay above there, it's blue skies ahead. Then let's zoom in and we'll take a look at the daily. Well, now we've got some more information. Now we got some more details to take into consideration. And what are we looking at? Very long balance area, momentum as a breakout of that balance as to be expected. And then what are we doing now? Balancing again. So what I believe is happening is round 2 of this right here. The market broke to new all-time highs very, very quickly with a lot of momentum, and then it went sideways for a week and a half. I think we're going to get something like that here, not necessarily going sideways for a week, but at least for another day. I think the market is going to go sideways. And the cool thing about it is, as I said, I'll know I'm wrong. If I'm not right and the market doesn't want to go sideways today, they'll get above that overnight high, they'll bring in new buyers, and we'll be at a new all-time high just like that. And so I'll know, okay, I'm wrong, the market's not in balance. And as soon as I know that, I can get very, very bullish because of that context, right? Because on the monthly, it's bullish and has no reason it needs to stop. On the weekly, it's bullish and has no reason it wants to stop. And if that were to happen this morning, if we were to get above that overnight high and then break the all-time high, we will be breaking out of balance on a daily. And balance leads to excess, leads to momentum. So if we do break out of this balance on a daily, we can expect momentum. So that's what's so nice about being right now sitting at a balance area high is that we know the highest probability is the move lower to the balance area low. And we'll know if we're wrong right away if we get new buyers above the balance area high. So all things being as they are, I'm pretty relaxed this morning, right? There's nothing I really need to worry about. So what else am I taking into context? Well, the fact that we are opening right smack dab inside yesterday's range, inside yesterday's value area, after the overnight just chopped around all weekend long, inside that value area from yesterday, from Friday. So what does that tell me? Well, we're probably going to chop, right? First thing this morning, when the opening bell rings, we're going to get some chop, some grind, some rotation. And so I can just relax. I don't feel a need to force a trade right away and wait for the context of what happens at 56.94. Does the market get above and find support? Does it get above and fail, or can it not even get above? Any of those scenarios, the first scenario is bullish. The other two are bearish for continuation lower. Okay? So all in all, the market is making a market understanding this morning pretty easy. That doesn't mean entries will be easy, but market understanding sure is. All right, let's jump over and we'll take a look at the NQ. See what's happening to you. Shooby-dooby-doo. Okay, so the same mechanism is at play for the NQ. The levels aren't quite as clean with the NQ as they are with the ES. The ES is making that perfect horizontal balance where it's literally just going sideways in an exact range, right? The NQ is not quite as nice. The NQ had momentum, a pullback with price, which is where you basically put the market on discount, trying to bring in discount shoppers, and now it's trying to retrace that move back up towards the all-time highs. So you could look at it as balance in one of two ways. You could say, this is your new balance area here. Now that we looked below the balance area low, we're likely to head up to the balance area high, or you could look at it as sort of that V-shaped recovery. The market sells off, brings in buyers, turns around and heads to the all-time high. Okay? So the NQ is positioned for a move higher a little bit more than the ES is. However, same exact story, market just rotated in the previous day's range all weekend long. It also created a 45-degree angle from the high. So what does that tell us? The most likely thing to happen this morning is sideways, chop, and grind in between 20, we'll say 660 and 2530. Okay, that range right there. Sideways, chop, and grind. Getting through this 45-degree angle will not be easy for the NQ. They will really have to poke and poke and poke to get through. However, if they get through that overnight high, they're likely to get momentum higher. Okay. And any buying above the overnight high would be bullish for continuation to the upside. So ironically, even though NQ was weaker last week, I would say it has a better chance of trying to make a move higher today, at least to yesterday's high, at least to Friday's high, whereas the ES feels more rotational, like it's going to pull back. Let's see what happens. Yow. Are there any questions on any of that from the chat? Please let me know. We got 20 minutes to kill. So let me know your questions. Bill K in the house. Good morning to you. Will is here. Good to see you. Danny G. Good morning to you. Tom Gunn is here. Good morning. Ships is here. Hola to you. Nap in the house. Trevor, good morning. Jay is here. Another day in Bookmap Paradise. Vu, good morning to you. Tony says, your new office is rockin' America. Yeah, I had, the office walls are disgusting. It's like this old wood paneling. So I had to decorate, and I thought I'll just buy a giant American flag and cover the entirely all the way around the walls. And that's what I did. It was also on sale for 4th of July. I bought the dip on the flag. Good morning to Vu. Welcome one, welcome all. Malang in the house. PSC is here. Danny says, can you go over Bookmap to see the liquidity? Yeah, absolutely. That's what we're here for. So those that are in the brigade know, we've been talking about how this new bracketing bot, whatever it is, there's a computer program that keeps about 1,200 or so contracts above and below price all day, every day. They only turn it off for news events, and they literally only turn it off for like a minute for news events, and then it's immediately right back there. However, these contracts never fill. They never, ever fill. So we've seen this in the past, and it's like every now and then the market will poke up and fill some of those contracts, but not these. Whatever this new algorithm is that's at play in the markets, these orders never, ever fill. They move at a tick for tick with the market so that they never fill. They exist purely to distract us. They exist purely to make it harder to read the rest of the information that's available. So you got to kind of, if you're going visually, which is the way I do it, I literally just look at levels and see where is the darkest colors. It is a little bit trickier to read. You got to kind of see the trees through the forest, so to speak. Now we figured out last week there is a way to kind of turn that off. I'm playing with those settings to try to get that just right. But in the interim, it is a little bit tougher to read liquidity. So what I am doing is I'm staying laser focused on the current order book. Okay. And looking for large nodes in the current order book, and then kind of scanning my eyes to the left to see how they change over time. Whereas I used to just look at the whole chart as one and kind of just scan right and left all over it. Now I'm very much starting on the right side of the chart and then scanning left to see changes that came into wherever it is. Because there is always going to be these big red nodes just above and below price. And you got to see through those because they don't matter. They don't do a single thing. They do nothing. I've watched them long enough now to know they serve no purpose. They do nothing. They are just there to throw off the other algorithms that use liquidity to make decisions. And so you have to stay focused on the part of the order book that doesn't change over time to see where those larger nodes of liquidity are. Okay. As far as liquidity this morning is concerned, I would say it's pretty bracketed right around price. Okay. So we got some interesting nodes up here at 5705, 5700, and 5697. Okay. So if the market is able to get up to 97, that will be the first one for us to kind of monitor and see what happens with it. Does it actually fill? Do those orders really fill up there? Or is that going to spoof? Is the second we get up there, that's going to disappear? If it spoofs and disappears, we're probably going to pull right back down. If it fills, we'll probably grind into it for a few minutes, take out all those contracts, and then continue higher. Okay, we got another one at 57, another one at 57.05. As far as to the downside, the only thing that really looks interesting to me is 56.80. And again, that just matches with the context that I'm expecting this morning, which is chop. Chop and grind, likely for the first hour of the day. Get as many people long and as many people short as the market can. How does it do that? Pushes up, gets them long, wipes them out. Pushes down, gets them short, wipes them out. Pushes up, pushes down, pushes up, pushes down, pushes down. Gets everybody so sick of entering trades, they're completely burned out, and then it makes its break one way or to other. And as I've said earlier, for those that are just joining, unless we can get above 56.94 and bring in new buying, that's very, very important. If we just look above there and pull back in, that doesn't mean a thing. If we can get above and stay above, I'm bullish for continuation to the upside. Anything other than that, I think we're heading down to 56.45 today. I'm talking about a chop zone at the open. Yeah, and nothing particularly impressive with the Q's liquidity either. Ooh, I take that back. All right, somebody's got some orders slapped on in there just above, we'll call it 2730. They got a bunch of orders up there. Let's go take a look at what that is in the chart. Is that like a previous level of interest? Yeah, it's right around Friday's high. So same story there. If they can get above the overnight high and find support, they'll look to head up and test this node. Okay. If that node spoofs, they'll probably pull down and just continue going sideways. If it gets up there and it fills, they'll grind into it, and then boom, pop higher. Very nice. I like very much. Kevin, good morning to you. Kahali, good morning to you. Frito in the house. The demo trader, appreciate you. Bernie is here. Willie T, good morning to you. We can use TradeMap Pro to filter that out. Yes. So that's this chart here is using TradeMap Pro to filter it out. The problem that I'm finding right now is it doesn't leave a lot of liquidity. Like it filters out a lot. So I'm still just tweaking settings to get it just right. To get it just how I want it. Good morning to Jeff. Akash, good morning to you. Good morning, Kaka. I don't know what that means. What did I just say? I just read whatever they put on the teleprompter. Good morning, Catherine. Happy to be back. Happy to be back, ready to make some money. Pew, 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 pew. And so they say, Charles, can you map out the different scenarios that could play out on the ES today? We've got 8 minutes until the market opens. We don't know what's going to happen yet. Just give us some ideas. What could happen? What are the different scenarios that could play out? Well, no matter what, I believe the beginning of the day will just be sideways inside this overnight range. Okay? From there, I could see one of several things happening. The market pushing up above the overnight high, pushing up above 95, bringing in buyers, bringing in support, and then continuing up to make a new all-time high. Okay? I could see a scenario where we chop sideways. We poke above that overnight high. We cannot bring in buyers. We come crashing back down, and we work our way lower throughout the day. And I could see a scenario where we chop sideways inside the overnight range, don't even get up there to test that overnight high. That one almost certainly will see the balance area low. So the basically most bullish, the middle, and the least bullish scenarios for this morning. I would say most likely, second most likely, third most likely. I hope that helps. So then you say to me, well, Charles, what if we don't get chop? What if the market the opening bell rings and this thing just goes for a run? It just starts to move. Well, then I say, what direction is it going? If it starts a move straight to the downside, I believe one of these two levels, the base of the single prints from the C period on Friday or the base of the single prints from the B period on Friday, 56.69 or 56.61 will likely act as support for a bounce. So if it does come down here, it'll probably just go boop like that or boop like that. If it starts shooting straight up, that would be bullish. Like I said, any new buying above the overnight high is bullish to test the all-time high. So let's see what happens. I mean, that's every scenario that could happen. Sideways and up, sideways and sideways, sideways and down, straight up, straight down. And then you say to me, well, Charles, you're being silly now. You're being ridiculous. You're pointing out all these different scenarios of what could happen today. You know, I need you to tell me exactly what's going to happen. I need to have a plan that tells me for sure the market is going to go here and do that, and I should enter at this level. Well, I say to you, my friend, you're cuckoo. That's not how markets work. So the best way to trade markets is to see every possibility of how things could play out and to just come up with a probability in your mind of which is more likely. Because as soon as you start to believe you know exactly what's going to happen, you create what is called confirmation bias, right? Your brain will start to discount information that contradicts whatever you think is going to happen. So if at the start of every morning, you're figuring out what is every scenario that could happen this morning, your brain is open to anything happening. If we get above that overnight high and you see buying, you'll be fine with getting bullish and looking for a long trade to test that all-time high. If you look above that overnight high and you fail and you pull back down, you'll be bearish to head back down and test that balance area low. If you see the market chopping sideways, you won't let yourself get frustrated because you'll recognize we're in a chop zone. I'm expecting it to go sideways. And you'll be open to where are the support and resistance levels. How does the market handle testing halfback, right? By being open to everything happening, you won't miss any information. There's no reason for your brain to hide things from you because no matter what, it's a potential scenario. But then you also have to come up with some sort of context for what you think is the most likely thing to happen. As I said, because of the fact that the market moved both down on Thursday and up on Friday, and then down again on Friday, all three of those moves perfectly matched a market that is in balance. I believe the highest probability is that the market is in balance. And what do I know about markets that are in balance? I know that I, as a trader, should continue to see them as being in balance until the market-generated information proves me wrong. Until the actual market itself says, no, Charles, we're not in balance anymore. And for me today, that is getting above 94 and finding new buyers. That's the signal. So until I see that signal, I must assume the highest probability is sideways to lower. But guess what? If I'm wrong and we poke above there and we get that new buying, boy, I will change my mind in a second. I'll be watching the Bookmap. I'll be watching the icebergs, the sweeps. I'll be watching where the liquidity changes. I'll be watching the market internals. I'll be watching the price action on the market profile chart. And when any of them are telling me we have new buying, I'll change my mind. That's the way you trade, my friends. Be like water. If you pour water into a cup, it becomes the cup. If you pour it into a teapot, it becomes the teapot. Let the market's information after the opening bell tell you what to be today. Are you a bull or are you a bear? Or are you expecting chop sideways? Be like water, my friends. Ship says, I too have a big American flag hanging in my office. Aren't you in Spain? That's impressive, my friend. Emmanuel, bonjour to you. Revenge says, tough, touch all-time high, short or long. Touch 56.60, 56.65, then long. Yeah, those are very specific reversal levels. But pretty much the way I see it is below here, short. From here to here, long. Above here, wait and see. And below here, wait and see. So short, long, wait and see, wait and see. All right, the market is open. Good morning, Sheriff. AF. Jay says, hit that like button. Yes, please. If you have not yet, we got 105 people here. And drum roll, 37 likes. Let's smash that thumbs up button. let's say thank you to Bookmap for putting this together. All right, so we got our first support inside the chop zone right here around 56.87. Pretty much anywhere between 87 and where we currently are, 89. So we are looking for a bounce in here to come back up and poke at the high. If not, the next support level of interest is going to be around 56.80. Okay, so once again on the NQ, this area between the current high at 26.25 and the overnight high at 26, we'll call it 50. That area is going to be strong resistance. So each poke that the market tries to poke in there will get smacked back down. If they can get above that overnight high, that is very bullish. That they will probably be trying to head up to Friday's high. So I'm expecting a smack down on the NQ and support on the ES. Demo Trader says these likes are rookie numbers. We got to get those numbers up. We're at 56 likes. We're at half the peeps. Thinking I'm an all right guy. Nunez says, Charles, how do you use Bookmap? It's a great question and a great time to ask it. I use Bookmap as a confluence signal. So my number one focus is always price action, right? It is where does the market go? How much time does it spend at that level? And how much volume changes hands at that particular level, right? Almost all my understanding of what the market is doing comes from that. What Bookmap does, allows me to do two things. One, it allows me to recognize what is natural trade and what is artificial sort of machine-driven trade. For example, right now, look at these highs. The market is poking and poking and poking into these highs, and icebergs just will not let it go. They just keep smacking the market down. Okay, well, that's not natural. That's not normal. So if I was long, I wouldn't worry about it. I'd wait to break through. If I was flat, I'd wait for it to disappear. I'd wait for the market to either break through all these icebergs that are trying to hold it down, or I'd wait for it to push lower and then the icebergs turn off. Because right now this is bots, and bots, they do shenanigans. You can't trust bots. They play games with the market. They create exact levels to get a bunch of traders to short and put their stops above so that they can burst through later on. Okay? So you can see from all those icebergs stacked up one after another, that's what they're doing here. They are desperately trying to stop this market from getting above the overnight high. Why? Because they want to keep it going sideways for a while first. Why? Because that'll get a bunch of stops above and a bunch of stops below, and then they can break harder whenever they do break. Now, it might break in 1 minute or it might break in 1 hour, but I just know they're playing a game. So that's the first way I use it, just to recognize what is real trade and what is, computer controlled insanity. And then the other way is to confirm an opinion that I get from price action. So if I'm saying to myself, okay, let's say the market gets above the overnight high, it's finding some support in here, and I'm like, I want to long it. What are my targets to the upside? Well, where is their liquidity? It'll move to wherever the biggest nodes of liquidity are. So those are great places to take profits. Is there no liquidity above? Is there shit tons of liquidity below and none above? Well, then maybe I don't want to get in the trade because there's no magnet to pull it up. The magnet is actually down and the look above and fail is higher. So it's just a contextual tool to add to my understanding of what I'm seeing in the price action. Revenge is back to work. Have fun. Trade smart. That's my rule. Every day, all day. Have fun and trade smart. Trade with your brain parts, not your emotions. Okay, moment of truth for the ES. We are above that overnight high. We are above that balance area high. So to me, this tells me right now I'm going to find out what to expect over the hours ahead. If we fail and we pull back down through the opening price from here, okay? If we pull back down through the opening price, that means the market wants to go sideways to lower today. If we can stay up here, I would say any support above, 92 holding, then we're likely to head up and test the all-time high. Okay? So here's the tug of war. Let's see who wins. All right, NQ also above their overnight high. There should be some short covering here on the NQ. We should get a little pop to the upside as any of those sellers from the overnight are starting to get squeezed. And then it'll be the same story for the Q. Overnight high becomes support. Bullish to test Friday's high. If not, more sideways. Seeing all these icebergs makes me feel like the market is pinned, which decreases the odds in my mind of a move higher. Let's see what happens. Nunez says, are those ES225 or E225 on Bookmap, those icebergs? Yes. So when it has an E, that means it executed. So the full number of contracts that they wanted to long or short filled. And if it's a C, it means it only partially filled and then they canceled it. So far, all of these are fully filling. Also, if you're wondering over here, there's a number 100 and then there's a number 2 as well. That means so far 100 contracts have traded at that level, and there are 2 different accounts that have icebergs there. Okay, so now we are looking for support here above, we'll call it 92. Can they hold it? No, they cannot. All right, that is a look above and fail as we pass through the opening price, telling me that we've got more sideways, more chop, and more grind. However, the fact that there's still an iceberg up there, that's sort of a catch. Normally, a look above and fail, I would assume we're heading much lower. But because there is still unfinished business at 56.98, I think the chop is going to be in the upper end of the range here. And that they'll come back for that high or disappear that iceberg, cancel it. One or to other. So this is now a sideways choppy market. And it will get bullish if they can get back above the overnight high again. Let's see what's going with Q. Same thing. Look above and fail, increasing the odds of sideways. Okay, first potential level for a bounce. Okay, no support there. Next support, 56.80. We are in a chop zone. So we're looking for support in here and then a bounce back up to what will be the halfback at the time. If that becomes resistance, so if we get a bounce around 80, come back up to the halfback, which at that time will be around 89, and that becomes resistance, I will be bearish for continuation lower. If we pass back through the halfback, more chop, more sideways, more grind. This feels very like the market is pinned to me. So just zoom out and take a look at this. Tried to reverse the market here, couldn't do it. Reverse the market right here. Who did it? The bots. What's it doing at the lows again? Same story, right? That's what happens when a market is pinned, when it is being artificially kept in a range by the options market makers. Percy says, yellow, amigos. Nunez says, does this differentiate between the difference in limit and market orders? So any liquidity that you see sitting in the order books, so any of the color that you see on the right of this little white line, that is all limit orders. That's the only liquidity you can see. Market orders only fill at that moment, you know, when the person smashes the button. So one way that you can recognize when something funky is happening is when all of a sudden you get a large volume dot where you did not have a big node of liquidity, right? If you get a large volume dot, that means a lot of contracts traded hands, right? And if there wasn't liquidity there, obviously if there's a bunch of liquidity and there's a bunch of contracts, well, that's just those orders filling. But if there's no liquidity, if it's thin and you get a big volume dot, well, then somebody got out or in at market. That's how you can often see stops and, emotional buying and selling. FOMO, Sheena says, what's a halfback and how do you know the bots are doing the trading? So the bots doing the trading is the icebergs. Okay. It's not the fact that there's just an iceberg. An iceberg can be a large trader just trying to hide his size. It's when you see iceberg after iceberg after iceberg stacked on top of each other and the iceberg's changing in fractions of a second. So if you zoom in down here, longs, 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 shorts, 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 longs, right? So that's just a bot that's trying to keep the market in this range. You know what I mean? Because it wants a bounce. It wants to move back up. So it creates liquidity. It creates orders in there to stop the market from moving lower. And what's a halfback? Halfback is 50% of whatever the current day's range is. It's this little white line that you see right here. Often acts as support or resistance. When it acts as support or resistance during chop, what we have right now, it increases the odds the market is going to make a move in that direction. So just now, moments ago, where did the market do? Came right up into the halfback. Where did it get resistance? Right at the halfback. What did it do next? Push lower. That's just what markets do. Think about it like putting the market on 50% off for the sellers. It's like a discount. They can get in at a better price. You don't even need a new mattress. But on Labor Day weekend, that mattress is 50% off, and you think, maybe I'll buy a new mattress. Same thing happens to the sellers. Okay, and here we go. So we're back at the halfback, and what is happening now? It's not acting as resistance. So that tells us we're not going back down. We're chopping up to look for sellers above. My guess is right at that iceberg at 56.98. Also want to get back to the NQ. So as I said, the NQ has a chance to make a move to the upside today if they can get above and stay above that overnight high. So I'm watching 26.52 on the Q. Can they get above it? If they do, can they stay above it? Knapp says it's Prime Day tomorrow? No way. It is? Oh, dude. I'm about to waste some money. Jay says, I'd love to see those new mattresses strapped on top of a Mini Cooper with the hands out of the window holding it down on its way home. Yeah, you love it unless you're in a car driving behind them, in which case you're terrified. Jay says eye patches are half price for Prime Day. On brand. Although they do actually sell eye patches on Amazon. It's a medical thing. So we're looking at very choppy markets here. Both markets, tight ranges, stuck like glue to their opening price. This is one of those times when I remind myself to just be patient and wait for new information. What they're doing right now is trying to get as many people short as they can. And then they'll reverse it up and try to get as many people long as they can. And then they'll reverse it down and do it again. Nor Auto Trader in the house. Good morning to you. Welcome. Squeeze them when it's up, squeeze them when it's down, squeeze them when it's up, squeeze them all around. Remember, these tight ranges are meant to convince you to get long or get short. So they can pop to one side and squeeze you and then reverse to the other and do it again. In my mind now, the highest probability is the market heading up to test that iceberg at 98. But I don't know that we'll get new buying up there. We may just tag it and reverse right back down. It's a chop zone. So they're going to chop it up. Dundee, my favorite question. He says, would you stay out of this chop or would you trade it? What indicators are you looking for in order to trade out of chop? So the out of chop is one of two things. Either new buying above the overnight high, so new buying up here, okay? That would be bullish, and I could go long, buy the dip and go long. Or if they were to push down into this lower area right here around the 80s, come back up and test the halfback, I could short the halfback. So the question of, do I trade in a chop zone? Generally, no, because generally I don't know what's happening. But as soon as I do, I'll take a trade. And so those are the two areas what I would know. Another move lower, followed by resistance at the halfback, I could short because then I would know the highest probability is that we're heading down towards the balance area low, or support above the overnight high, I could long because then the highest probability is testing the all-time high. Again, that's over the next few hours. But I may have to sit here for an hour, maybe an hour and a half, maybe two, before I know what's coming next. And that's why I call it a chop zone. Because it's choppy. Neri says, Charles, do you think the bracketing of liquidity, the 3 points above and below, renders the heat map useless? How are you adjusting your strategy for this? So I talked about this earlier. Useless, no, but much less effective. Like, it used to be very easy to read changes in liquidity in the heat map, and it is tougher with those brackets on. It muddies it up. It just makes it harder to see. But the rest of the liquidity is still there and can still absolutely be read. So it is still a very useful tool. It just requires a little more effort. And I think that's why those bracketing bots are there. Not for us. I don't think they care about the humans that are looking at it. I think they care about the algorithms. Okay. So we've talked about this in depth, over the last couple of years, that there are day trading bots that are literally just looking to make 1 or 2 points at a time. Right? And what they do is, however they're calculated, however the quants have programmed them, they use liquidity and changes in liquidity to make their decisions, right? So the market pushes to a pivotal level. It's at the overnight high, right? And these bots are saying, should we go long and try to take profits just above the overnight high? Or should we wait for the market to poke above the overnight high and then short and take profits as it pulls back in to the overnight range, right? Like, that's the types of stuff that these day trading bots do. Well, they're programmed to use whatever's happening with liquidity in that moment to decide whether or not to enter the trade, where to put their stop, or where to put their take profits, and so on and so forth. So I think this bracketing is to throw those computers off. And I think it works because overall, the liquidity in the order books has been way thinner since we started seeing this. There's just fewer contracts, limit contracts sitting in the order book every day, which means there are fewer of those day trading computers operating on the ES. And I think this is why. Beep boop, beep boop. We don't know what to do with these, so we will not operate. M says, is market profile at 5 or 15-minute intervals? 30 minutes. So there's nothing wrong with setting up your charts, whether you're looking at market profile, which is the TPOs, the letters, or volume profile. You could stretch that out and have a profile for each 5 minutes or 30 minutes or whatever you want. There's nothing wrong with that. You can choose whatever time frame works best for you. I do personally find the 30-minute is the best. It sort of is fast enough to catch changes in the market, but slow enough not to get you chewed up. If you're looking at 5-minute or 15-minute, there's a lot of changes that happen. So it seems like it's got momentum on the 5-minute, and then all of a sudden it reverses, and then all of a sudden it reverses, and then all of a sudden it reverses. And you're like, oh my God. Whereas if you wait until there's momentum on a 30-minute basis, you can trust that to continue for another 30 minutes or an hour or 2 hours. You know what I mean? So there's no right or wrong in TA. There's just what works best for you. Okay, so I said it before. I'm going to say it again. It is bullish to get above the overnight high. If they can turn it into support, I will be bullish. But I first want to see what happens with this iceberg at 98. Because there's a very real chance we just poke into that. Whoops. And it disappears, and then we come right back down. So I want to see us deal with this iceberg, then look for support. If I see it, it'll be buyable. Let's jump over and look at the Q. So yeah, Q is looking bullish. Q looks like it wants to test Friday's high. They just got to hold. We'll give them a little breathing room. We'll say they got to hold 26.33, the halfback. If they can hold it, they're likely heading up to Friday's high. If not, more chop, more sideways, more grind. John, it wasn't me. That's the computer talk. That's what they say. Tom says maybe it keeps the algos from snowballing out of control. Yeah, I don't try to understand what games are being played. You know what I mean? This is like two 500-pound gorillas fighting with each other. Who's doing what and why, I have no idea. But I, as a day trader, can tell when it's, machines playing a game and when it is true buying and selling by the market that's going to get follow through. So far, this feels like a game. I'll change my mind if that iceberg at 98 disappears and then we pull back into support. Otherwise, I think they're just taking it up to bring it back down. Danny says, when you're looking for price to hold support or resistance, how long do you wait before knowing it's holding or not? So this is going to be a very annoying answer to your question. It's different every time. It depends how strong I think a support or resistance level should be. If I think it should be a strong level that should definitely hold, I just need to see one bounce. So like, let's say, for example, this is not a trade idea, but I'm just using it as an example. We got the opening price right now exactly at the halfback. Okay. So if the market were to look above and fail the overnight high again, and it were to bounce exactly there, that would be bullish, because the look above and fail should shoot the market back through the open, right? But if it's not going to happen, it'll be the halfback that holds the support. So if I was watching that happen and I wanted to enter a trade, the first little bounce, boop, I'd be throwing an order in there and not wasting any time. So it will probably grind in a few times before it ends up making that move, but I only need to see one little bounce. Now, what we're talking about here with the overnight high, I kind of need to just sit with it for a few minutes and just feel what is happening. Is it going to hold or not? I got a reason for the market to head up to the high, which is the iceberg that's up there and the now poor high, but I don't have an exact level to be support. So I got to kind of just feel it out. And maybe it'll be 3, 4, 5 touches before I'm like, okay, I could enter an order. The important thing is whatever system you use to measure support or resistance, that you just use it every time. Just always look at it the same way. Expect to see the same things. And if you see what you want to see, enter an order. If you don't see what you want to see, step aside. And just keep doing that over and over and over again. And your brain will naturally create neural connections. It will naturally get better and better at recognizing what is holding and what is not holding. It'll get better and better at knowing when to enter those orders and when to wait for a few more tests. As long as you systematically do it the same way every time. If one day you pick a random level and just throw a limit order in there and then hope and wish, and the next day you watch it bounce and bounce and bounce and bounce, your brain isn't creating those neural networks. It's not getting better at the skill of seeing support or resistance. And that's what you want to work on. Speaking of which, that is not support. So we're going to get some more chop here. We're now watching that halfback I just mentioned at 90. 56.90, potential bounce to come back for the poor high. Can they hold it? There is a very good chance the market is coming back for this high because of the combination of the iceberg and the reversal exactly at the A-period high. There's a very good chance we're coming back for this high. But in a chop zone, it's hard to know what is the final dip that'll get us there. Maybe we'll reverse right here at the halfback. Maybe we got to dip all the way down to 80 and come back. It's just hard to know. They don't make it easy. Mike L. says, why doesn't the heat map populate where the live market area is? I also can't figure out how to get it to stop saying the orders out loud. I actually can't help you with those questions, but reach out to technical support through the website and they'll tell you exactly what to do. Those are all just settings changes. I promise you can fix that. I just can't tell you what to do. It's to chopper around, to chopper around. It's choppy. Hey, it's choppy, choppy, choppy. Why did I never think of that one? Rainy days. Thank you, John. Willie T. All right, I'm watching the ticks on the queue. This feels like a really important moment for the buyers if they want to defend. Yep, they're right at that overnight high. So moment of truth for the NQ here. If they can hold 52, if they can bring in the buyers, get the bounce, they should be able to head up for Friday's high at 27.40. If it fails and it pulls back in, that is less bullish to see and increases the odds of more chop, more sideways, more grind. DK says, are the fluctuating numbers in the brackets to the right of the heat map the number of orders? Yes. So I'm not sure exactly which numbers you're talking about. These ones here are the actual literal bids and asks second by second. This right here is just another way of visualizing the liquidity in the order book. So the number of limit orders. You can actually put in exact numbers there if you want. And then this is also that same thing, just visualized, as the heat map instead of as a profile. And then the numbers right here, that's the number of contracts that traded when that iceberg was tested last. And the fact that the iceberg is still there, that this red line is still there, tells us that those orders are still waiting. They want to fill more contracts. How much more? Your guess is as good as mine. That's why it's an iceberg. It's hidden. Darn it. It's under the surface of the water. And we're just cruising in the Titanic. Rando says, what's the tool to the left? It's called a market profile chart or a TPO chart. What it basically is the same thing as a candlestick. It just displays the information in 3 dimensions. So it lets you see where the market went in terms of price, how much time it spent there in terms of the number of letters, and how much volume it brought in terms of the volume profile. Can anyone in the chat, can one of my regulars tell me what is less bullish? Even though we're heading for the high, because it's a poor high, what is less bullish about what's happening right now? Slick, it is not currently, but we're working on it. Or I'm working on them to try to make them do it. Jeff, how do we get that? A market profile chart? Just Google it. Whatever broker you use, just Google that broker and either TPO charts or market profile charts. The company I use is called Window Trader. Window spelled without a W at the end. But there's lots of options for it. Tempo. Yes. You guys are all over it. I got the best chat in the business. Nap is on it. Cog is on it. Frito's on it. Chang is on it. Nor is on it. Alyssa's on it. Rob is on it. Everyone gets it. That if this thing really had momentum and it really wanted to go to the moon today, it wanted to go make new all-time highs, it would be moving way faster than this. So that tells us that what is probably happening is they're just trying to get people long at the highs so they can bring it right back down on them. So I'm not bullish yet. No, sir. Even though I do believe we're about to make a new little high this morning, I got to see new buyers to be convinced we can hold it. Otherwise, down she goes. And then you say to me, well, Charles, what if we make a new high and then the tempo picks up? Well, then that's a change in the market. I can change my mind. But right now, it seems like it's all a game. John says volume is falling off. No, that's actually not true. We do have taper at the high and low, but where are the largest nodes of volume? So for the day, we have one large node above the opening price. That's a little bit bullish to see. And we have a node above the overnight high or at the overnight high. That's bullish to see. And in particular, over the last 30 minutes, most of the trade has happened above the overnight high. So the volume, as strange as it might seem, is actually bullish. But it's the tempo that's telling me it's all a game. They're trying to trick us into longing the highs. Fool me once, shame on you. Fool me twice, you don't get fooled again. Art says, how do you see new buyers in your volume TPO? Well, what you're looking for is a location where new buyers would have to step in to keep the market going higher. So, for example, right now at the overnight high, if they're going to get from where we currently are at 95 up to 98, it's going to take new buyers. Okay? So any volume that we see here, if the market doesn't tank, is buyers. It's all new buyers entering the market now. But the question is, where are those buyers going to take profits? Are they scalpers? Are they just looking to get to the high and then they're going to start taking profits in here? Or are they actually strong hand, day trader / swing traders that are going to hold this position? And that is why I'm saying, to me, to trust it, I got to first see them break through, then come back down and turn it into support. Because right now, this to me is weak hands. This to me is just scalpers trying to make a quick buck, and they will take profits real quick, and then the market will come right back down. So to truly trust it, I got to see it break, and then that's when stronger hands would step in. But as far as whether it's new or old business, you have to pay attention to where the market started and where it went. So, for example, if the market were to go down right now, that wouldn't necessarily be new sellers. That might just be longs exiting that makes the market go down. But if the market were to go down below the A period low and get selling down there, volume down there, that's new sellers because you would have already taken out all these buyers. So it's about where the market goes and what happens when it gets there. John says, how is volume and tempo connected? How are they connected? I don't know that I would use the term connected, but they are all pieces of information. So tempo has to do with emotion, excitement. The faster the market moves, the more people are forced to make a decision, right? Whether it's moving up, down, or sideways, if it's going quickly, you're like, fuck, I got to act. And that will lead to more irrational thinking, right? More irrational decisions. So if it's trending, it'll just keep trending. If it's balancing, it'll keep reversing out of nowhere, right? So tempo is about emotion, right? Volume is about literally the number of participants doing business. So when you have fast tempo, you will generally have less volume. When you have slow tempo, you'll end up with more volume because people are doing business again and again and again at the exact same level. See, this again feels like tomfoolery to me, guys. Another iceberg trying to stop us from breaking that high. That's not orders trying to short for a bigger move. That's orders trying to break through and take out the stops they're creating above. If they want to get short, they get short in those stops up there. John says relationship. Oh, yeah. Tempo and volume are sweet, sweet lovers. C period making a poorer high. Okay, so now the market is one time framing higher. That is bullish to see. We are above the overnight high. That is bullish to see. And we finally took out that iceberg. Okay? It only wanted to trade 200 contracts. So we took out that iceberg. So now the market is set up for a move higher. What do I need to see to put in a long order? I need to see support here at the overnight high. Any buying above 56.94, any support is buyable to me. The target is getting to the all-time high at 57.08, which is a weak reference. It was weak on the 10th because it was created in the overnight market. Any all-time high created in the overnight market is eventually retested by the regular trading hours. And then on Friday, when it was retested, the market reversed exactly at that level. So that tells us there's stops up there waiting to be taken out. So from here on out, I am bullish as long as they can hold that overnight high. Because if they can hold that overnight high, the most likely place they're going is for those stops at the all-time high. But if they fail and they pull back through that overnight high, boy, I am as bearish as can be, because that would be another look above and fail the balance area, meaning we're heading much lower. So bullish above 94, bearish below. And I would say the support would be buyable once it's confirmed. With that, I must say goodbye, farewell to all of you. Thank you so much for joining. If you are new to the channel or new to me, Piratetraders, consider heading over and subscribing to my channel, Piratetraders, here on YouTube. In about 30 minutes, I'm going to be doing a conversation with a guy named Andre who runs a software company called Edgeful. And we're going to have a conversation about some ways to find edges in the market using data. And we'd love to have you join us there. Members of the brigade, the link's in your email. So you better be there. And y'all better smash that like. Thank you so much for joining me. If you're not a member of the brigade, I will see you here next Monday. Goodbye, everyone. Thank you very much. As I said, bullish above the overnight high, bearish below.